Good morning. We're letting some folks all click in as we get going this morning. So if you want to share your lovely faces, we'd love to see you. Fantastic. So a few more joining. I'm going to give it just one more minute. Okay. Well, it says a couple more people are joining, but I'm going to go ahead and get started. So good morning, everybody. I hope everybody's doing fantastic. My name is Fritzy Ortiz with Ticor Title, and thank you for joining us today. This is your real estate forum, surviving and thriving in today's market. So we moved to a bi-weekly program. We're going to still try and keep you guys up to date on all of the information that we're hearing out there. Obviously things are changing day to day, so we'll keep you posted on what we think is relevant and important, and in our market we think you guys may want to know. So my name is Fritzy Ortiz again with Ticor Title. We have a beautiful panel that is joining us today. We have a couple of special guests. So we have Mr. Carl Bassett from HomeVestors. Carl and I actually started this as a live program, and we were doing classes once a month. And as things have been changing, obviously we decided to go to the Zoom meeting format, which so far so good, is going great, and we appreciate you guys all participating with us. We're going to continue to do it in either format, but thanks for being here today. We have Mr. Aaron Taylor, the real estate guy. So Aaron is very well known in the real estate community, a mentor to many, and obviously given us some of his knowledge and letting us know what's happening on the real estate side of things. We have Mr. Dustin DeHart from Nova Home Loans. So lending, critical obviously to our industry, and he's in the know of what's happening beat by beat on lending these days. So without a lot of loans on our deals, we can't get them closed. We have Mr. Julius Mendoza from Lending Home. So Julius is actually works for a national company, the largest national hard money lender, and he'll correct me if I'm wrong when he comes on, but he graciously joined us today, and we're really happy to have him. We'll find out a little bit about what is happening with the largest national hard money lender and see how their restrictions changed. And we also have Mr. Travis Schurr today. So Travis is a local investor as well. He is joining us today and has been in town for a very long time. I don't know if you're actually a native or not, Travis, so I'll have to find out. But he is talking Airbnb today, but actually we're gonna dig in as deep as we can and answer as many questions as we can get from Travis, because he is well known in our market, and we want to know what's happening in his world too. So we have lots of different perspectives today. Thanks for being here. We're going to go ahead and get started with what's happening in the world today. So we have reopened to some degree, and what does that look like for each of you guys? I'll start with letting you know what it's looking like for us so far. So we're taking a slow approach into getting back into it. A lot of our buildings may be open to a certain degree and have certain restrictions. So many of the buildings are requiring that to enter one of our buildings that you still wear a mask. And we are keeping all social distancing measures in line. So we obviously at a closing table are very close with customers. So we're trying to keep the social distancing there, make sure we're providing masks for customers if they choose to wear them. We are suggesting that they do, but they're not required to. And we are providing those masks if they want to. Like I said, some of the buildings are requiring it before they come in. So they may have to come in with one. Make sure we're trying to address that with every closing. So make sure you know that though before you go to your closing. And then we are also bringing some employees back slowly. as long as there's distance in the office and everybody's got the protocol down. We have products from that hospitals use in certain states to disinfect. So we're definitely staying up to par as what we need for guidelines, making sure that everything's disinfected. As a matter of fact, we had a company come in, which we will have on in 2 weeks. Just so if anybody needs to get their offices disinfected, you'll have an option, and they'll be on in about 2 weeks, Restoration 1. So anyway, let's get started. Carl, how's reopening looking like for you? I know that you have been open because you have a construction license, so you've been able to do that, but what changes have you seen out there?
So we're buying. I counted up. We've got 14 properties under contract right now that will be closing on the next roughly 2 weeks. I've been buying rentals in the Kansas City and St. Louis market, and I have someone that goes out and does my inspection for me. Able to do that. But the numbers, just for rental properties, the numbers make a lot of sense in those markets. It's why I'm going to those areas. But excited about being able to buy rentals. I believe this fall and winter here in Las Vegas. I'd probably rather have rentals here if I can get the numbers to work. But other than that, it's business as usual. There's a lot of agents of those 14 properties that we've got under contract. A lot of it came through our advertising, but almost half came from just agents that brought us deals and said, hey, do you want to make an offer on this? Or do we have someone who wants a cash offer? And so they could just bring it directly to us, and then they represent us. I'm not an agent, so they're going to represent me on the buy and represent the company when we go to sell. So they get the double commission when they contact us. And then, so that, a good amount of our inventories come from that angle.
Well, and that was a big part of why we even started the forum, was to let people know that don't lose out on a deal. If a loan does fall out or their financing falls out, don't lose out on a deal. There are measures out there and people out there who have cash to buy them and who have a lot of flexibility, just like the iBuyer did, or with the options that the iBuyer was giving. When we started, that was a big drive for us, because the iBuyer was affecting not only the real estate agent, but they were affecting investors too. And we had a lot of local investors who knew the market a lot better than any of these guys who weren't really in the day-to-day of our market. So they can come in and they have a lot of flexibility, just like these iBuyers. So we want to keep on that path too, especially right now when things are a little bit more difficult. So that's why we're keeping not only lending as part of the panel, but hard money lending and keeping the options open. So that sounds great. So I'd love for you to be back buying more here in Vegas, but I love to hear, that these other markets are going so well for you.
Yeah, all the properties I've got, those 14 are all just Vegas. We've got 20 something that are out of town, but that we're buying, but those 14 are they're here. I'd love those numbers to be higher. I feel like a lot of people are sitting on the sidelines and they're wanting to do this, but they're not taking action. So
right.
These next couple of weeks, we'll start getting a lot more moving. So
I believe that as well. Mr. Aaron Taylor, what are you seeing out there? How has life changed in 2 weeks?
Well, I mean, for us, it's, like I said before, it's business as usual. Since this all started, I work harder, I get up earlier, and I work later. And the agents and the people that are going to succeed in this pandemic, whether it's true or not, there's different perceptions on both sides, are the ones that out hustle everybody. And I'm a hustler, so I get up early and work hard. And some of the things that I see, that the contingent sales are rising, so that's a good thing. People are tired of not making moves, so they're out there buying. They're not like last year, but they're going in the right direction. I do see that we're going to have adjustments in the near future. That's going to happen for sure, because how the casinos, everybody opens, they don't hire everybody in full force. But we're really taking my agents and really having them go after our database, make phone calls, let people know that you're knowledgeable in the business. The perception with people that is how smart you are, how good are you at what you do. And when people know that, they'll use you and gravitate towards you and refer you. So we're changing a few things that way. We're being more aggressive with, I know some of you agents might not like this, but when we have buyers that buy our properties, thank God for me, most agents don't keep in contact with their people. So as soon as they close, we go knock on the door and we say hi and congratulate them, and we keep in contact with them. So we're doing little things like that to be more aggressive, because I know that, I'm getting older now. So I know how fast time flies. And I know that in 5 years, my son is going to be the real estate kid, the real estate guy. And so we need to just keep this machine going and going and going. So we look out in the future, make adjustments, and just, work hard. So there's going to be a lot of opportunity for a lot of, especially us at the panel, because every single person I see at this panel are hustlers, every one of them. And we're going to change with the market. We're going to work harder than the next guy. And there's going to be a lot of real estate agents that just go by the wayside because things are a little different, and that's fine. But there's a lot of opportunity for the people that bust their ass, for sure.
So I have a question. So are you seeing anything where people from other industries may want to get into real estate now? I mean, is there any, maybe people dropping off that are in the industry that aren't hustling, but people that are not in the industry that maybe want to get in? Are you seeing that yet? I feel like that may be something that could come in the future, but maybe it's a little too soon, or?
Yeah, no, I am seeing that. Actually, I had a couple people that were professionals in the car business and a few other industries that are becoming real estate agents and loan officers. One of them actually referred to Dustin, and she's probably going to be incredible at what she does. But again, just probably like you guys, when we talk to a potential realtor or potential loan officer or title rep, there's a lot of opportunity, and I encourage them to do it, but I also let them know the bad and the ugly of the business as well. Because, I have a saying when I go to the schools or do seminars that people get into this business because they think 3% of 1,000 is 3,000, and it's not, it's $500. So I make that very clear to them that 3% of 100 grand is $500. So, you're going to have to work hard. It's not, people aren't going to just come to you and call you because you got a license now. But yeah, I see that momentum swing for sure. And I'll tell you, there's people in other industries that are exceptional at what they do that I welcome them, because competition is great and we need good professionals out there that are going to keep in contact with their sphere and their database and, do good by people and do the right thing.
Beautiful, beautiful. Thank you so much. So you not only got some new potential agents, but Dustin, sounds like you did too.
Yeah, so Aaron did refer over one of his friends. She was a finance manager at Mercedes, I believe, for the last 25 years. So has a good background in it. Normally we don't hire brand new LOs right off the street, but she impressed me. I think she's going to do fantastic. And she's starting with us in about 2 weeks. So excited about that.
Nice. And she's starting at an interesting time, right?
Yeah.
So we all know that things have been changing for you probably hour by hour, right? So what's new with you? Do you have good news for us? Has anything come back? Have we lost some more loans? How is it looking?
Well, look, for the last 3 webinars, I've been talking about the forbearance programs and the issues that faces with the mortgage industry because of liquidity. Nothing much has changed, although we did get some good news yesterday. The FHFA, who oversee Fannie and Freddie, they have announced that, after you've got out of forbearance, the period, you don't have to wait 12 months now to get a home loan. If you haven't missed payments, believe it or not, there's 40% of people in forbearance that are still making their payments. I think they just got into it and didn't realize what they were doing. I'm seeing that on my end. They don't have to wait, but most have missed payments. So instead of the 12-month waiting period, it's now 3 months, which is really good. So that'll get people back into the market sooner than we thought. They had to walk a fine line between, they had to show some type of deterioration from doing it, but they didn't want to put the people in the penalty box too long to curb the economy and home loans. So that is good news.
That's great news. 3 months is a big difference.
It is. And believe it or not, the numbers came out from the Mortgage Bankers Association on purchases. I found this really surprising. Purchase volume has gone up for 5 straight weeks. We actually went up 6% just this week alone. But get this, we're only down this time from last year 1%, which I thought was crazy. If you had asked me yesterday, I would have said that's like 15-20%. So I found that number really surprising, which that's got to be really good news for all of us, because I think everybody on this call right now are seeing more activity as far as the purchase side is coming around. So,
and that's a local number. Where did you get that number, if you don't mind me asking?
So that that's the national number. That's through the Mortgage Bankers Association.
Okay. Okay. Well, no, that's absolutely fantastic news. And I know, like we've talked about the past few weeks, like it's surprising that the business is staying steady, but I don't know if, like to Aaron's point, I don't know if just the people hustling are just keeping more of that business, or if some of the business, so it's decreasing for other people, but maybe not for the people who are,
Right.
killing it every day still.
Yeah,
So
I think it was as bad as we all thought it was going to be. So that's great news.
yeah, that's great news.
Low. They've been inching up a little bit, but they're really low, you guys. There's a lot of people hearing that you can't do cash out refinances, which is not true. We talk to people all the time, and they may have gone to another institution before us who told them we don't do cash out refinances, and it's because of the forbearance issues. Companies like Nova and other companies, they're still doing them. They're a great option for people right now, you guys, to pay off some debts, to put 6 months reserves into the bank, that can help them sleep like a baby. So there's still cash out options for people. They just need to go to the right place.
Well, look at you, the little sunshine on our panel today, Dustin. I'm glad to see that.
Yeah.
So while we're on the lending subject, I'm going to jump over to Julius. Julius, hard money nationwide, and you got a region. Fun stuff. What is happening in your world? I know we're very curious as to how it's changed. We've had several investors on here who work with you, so I know they've shared some stuff about some of the programs. What's your outlook? How's it looking for you?
Yeah, absolutely. So it's definitely been an interesting time, especially when a lot of liquidity dried up on Wall Street on or around, it was about March 23rd. So basically, whole loan buyers stopped buying whole loans. So that's why you saw the rental programs for us and other lenders go on a complete pause. That's why you saw other lenders that are doing bridge loans like us. We do bridge loans for fix and flip, cash out refi, short-term bridge loans for investment properties in general. A lot of other players in the space that are at our scale went on complete pause as well. We were actually able to keep going because of some securitizations that we locked up in Q4 of last year and Q1 of this year. So we're actually able to continue to lend based on the securitizations. So basically, as opposed to selling whole loans on the institutional market, with the securitizations, we'll package the loans and then sell them on the institutional bond market. They're committed sources of funding as long as we stick to the underwriting guidelines that we agree to. So as you can imagine, when liquidity started to dry up on the secondary market with these securitizations, although we can still get, although we're still going to buy the loans, things tightened a bit, right? So we're still fully operational in the sense that we're funding deals, we're working just as quickly, we're just as responsive. To Aaron's point, like, still working remotely and maybe working more than I was before. There's no commute, right? I'm working from home when I wake up and, whenever I want to shut off, really. So we're still funding, although things have tightened a little bit. As far as what we're seeing in the markets in general, one thing that we have been following closely is just the number of submits and the number of payoffs that we're seeing. So in March, we were seeing about 15 million a day in submits. So that was pretty typical. And then
nationally, right? Are you speaking nationally? Are you speaking nationally?
Yeah, we're speaking nationally.
Okay, sorry to interrupt. Go ahead.
Yeah, it's okay. So on a national level, we were seeing about 15 million submits a day. That was the average. And then come April, we saw a downtick in volume. So we were seeing about 10 million in submits a day, but it kind of stabilized there. That was kind of the support, if you will. And then now in May, we've seen an uptick. And right now we're averaging in May about 12.5 million in submits a day. So that's a nice little indication. Maybe there's a little more activity going on. Obviously the activity slowed down because people were being more conservative with their offers. And if our credit policy tightens a bit, people have to underwrite their deals around that credit policy, right? Another thing that we've been looking at is payoffs. So one nice thing about the payoffs, and that's where people are paying off our loans either through a sale or a refinance, right? Those were stable throughout this whole, thing. So that's a good sign that people are still transacting or executing on both ends of the transaction. which we think is a good sign. And then as far as prices go, we haven't seen much pricing drops or pricing changes basically in general. And this is also on a nationwide level. We are seeing some thawing in the credit markets. So we are seeing some players come back, which is a good sign. For our rental program, we think it's going to come back a lot sooner than we thought it would. We were thinking maybe later this year in the fall or something like that. Because a big thing that makes rental loans go on pause is with the uptick in filing of unemployment and just the sentiment overall about people maybe not being able to pay their rents or not paying in general. In order for Wall Street to buy those whole loans individually, there has to be confidence that people are going to pay the rents and those are going to perform. So since that event on March 23rd, we saw a big tank in the stock market before that, but now it's been consistently rallying since then. Unemployment, although we've seen about 37 million in unemployment filings over the last 6 weeks, we've seen that tally slowly starting to decline, which is good. 75% of those filings, well, reported, right, of course, are temporarily unemployment, so furloughs, if you will. So hopefully that'll be basically a sign that of hopefully when people start getting back to it, the non-essential workforce gets back to it, it'll be a sign of a quick recovery, hopefully. I mean, it's speculation, right? My crystal ball is good as anyone's, but we definitely want it to be more V-shaped than anything else, right? Whether it's U-shaped or whatever shape, we'll see. But overall, we've been seeing good signs of recovery. And the overall gut feeling is, I mean, things are getting busier. Submits are going up. Payoffs are consistent. So overall, good things that we feel that, things obviously aren't going to get back to normal right away, but we get there slowly but surely.
That's great news. I know that, that's really good news, actually. So I know Travis had a question earlier before you got on regarding the rental, your rental loan. So do you want to dig in a little bit deeper on what that program did look like and whether it exists at all right now or what it may look like in the near future? And Travis, if you had anything more specific to ask about that program, if you want to jump in.
Yeah, absolutely. So for now, we are actually offering 1 to 2 year bridge loans. And then we have an option for properties that are finished and that are rent ready, whether they're leased or not, right, at a lower rate. So those are interest only rates with no coupon. Now, for the rental program, when is it coming back? We should have a release date later this week. And then as the markets start to thaw and liquidity starts to come back, the rental program may not look exactly like what it looked like before. Things are going to come back a little tighter as they gradually loosen up and get back to potentially where they were before. But just so you have an idea of what it did look like before, we were doing for the term 3-1 ARM, 5-1 ARM, 7-1 ARM, or 30-year fix. So with this program, it doesn't have to be leased. So there was no minimum DSCR requirement, which is cool. Because I think you were mentioning someone's going to talk about AirBNB. You could use that program for AirBNB because there's no DSCR requirement. It can be used for purchase or refis, although the main way that people were using it is pick up properties under value, maybe with a short-term loan or cash, build the equity into it, and then refinance afterwards. Because that way you could take some cash out, replicate it, or just use the equity in it to do a rate and term and get a better rate, right? So there was no reserve requirements, no income requirements, no tax returns, nothing like that. So that made things a lot easier. And I think I mentioned up to 80% LTV. Now the rates, although there's different things that would drive the rate. One is FICO, one is LTV. If it is leased, it helps your rate, and then property type. Now, out of all the different combinations, the main range of rates that we were seeing were anywhere from 5.5 to 6.5. Now, remember, this is before. We'll see what it looks like when it comes back. But it's just a high-level overview of kind of what it looked like. So
it's completely out right now. And I see perfect segue into our next segment. So, Travis, on that subject, on that loan, you had mentioned earlier that you were looking for that to come back. So it sounds like it's not back yet, but it's on the horizon.
Yeah, for sure.
Julius, quick question. Can you run through the 2-year bridge on what that looks like? For example, if we already have properties that currently have like a hard money on it, or something that we got to get out of to bridge us for 6 months to a year? What do those look like?
Sure. So again, the spirit of that loan is to lock up temporary financing while you find a more permanent solution for it, right? So we're offering 1 to 2 year terms. It's interest only, and there's no prepay. So whether you hold it for a month, 3 months, 6 months, it really depends on, when you can lock up more permanent financing, or if you end up deciding to sell it, right? Everyone has their A exit strategy and their B exit strategy, right? So just depending. Now, as far as what they look like for process, depending on how long the property was held, we'll either do like an internal inspection before closing for the as-is valuation, or an appraisal. If it was less than 6 months, likely we don't need to do an appraisal. If you hold it for longer than 6 months, then likely we will need to do an appraisal. So it's based off the as-is value, right? Now, if you are doing a cash out, we're going up to 65% of the as-is value. And then if you're doing rate and term, we're doing 70% of the as-is value. And then the rates will depend on a couple different things. One is experience. So one thing that Lending Home will look at is how many exits an investor has completed in the last couple years. They'll look at sales, and sometimes they'll consider long-term refinances as well. Another thing that they'll look at is leverage, right? So the lower the LTV, the better the rate. And the other thing they'll look at is state. So when we're selling these loans and packaging them into the securitization, typically the things that will drive rate are loan performance in that state. So the better the loans perform in that state, the lower coupon we're able to sell those at. The other is experience, right? The more experience a borrower has, the less risk, and the lower coupon. And then LTV, right? The less risk for the lender or the institutional investor buying on the back end, the better coupon that we can offer on that front as well. Range of rates, it really depends on experience, but you're going to see mostly for the bridge loans, somewhere between the 7.5 and 9.5 range. I know that's kind of a wide range, 200 basis points, but I mean, if anyone wants to talk offline about it to see specifically for that scenario what we can offer, we can get in touch. Like, give me a shout, give me a call or an email, and I'll put it in the chat box.
Fantastic. Yeah, and we are going to get started shortly after we talk Airbnb on our next 30-minute segment, which is Q&A, and we encourage questions to come in through the chat. So if you guys have any questions that have arisen throughout this chat, please go ahead and put it in the chat. Jeff Belknap, who I did not introduce earlier, sorry Jeff, but he is controlling the chat, so he will be governing the questions as we go into our next segment. But that's a perfect lead into, thank you Julius, into our next guest, Mr. Travis Schurr. And I happened to catch your segment on the news the other day, so which is a big topic. I think people are wondering, are Airbnbs, are they completely gone? Have they died? Or is that going to be the way to go? Are people going to feel safer in an Airbnb right now when they come into town? Because there's definitely a lot of pent up energy. People want to get out of town. I see that everywhere. I see that after the reopening. I mean, there was lines for restaurants and you couldn't get reservations. And obviously with the smaller space, since the 6 feet distance between the tables and things, I know that there's less capacity, but there was like an uproar and people being out. I'm thinking that that's going to transfer into traveling, hopefully, for our little economy here in Las Vegas. Travis, what are your thoughts on it? And you're a big Airbnb guy, so give us your local expert knowledge and opinion.
So Janie and I, we have, I think, 23 now. We kind of started like backwards. Obviously, we're big flippers. We bought a house in 2015 that we furnished and we couldn't flip, and we went and stayed in an Airbnb in California. And I was like, man, this is a dump. We have this nice house back home. We should try it. So we put it up on Airbnb when we got back. Didn't check regulations. Didn't check licensing. Didn't do any of that. And the thing rented like in an hour. So we were like scrambling to run to Target and bought all the, because, you know, it was furnished, but it didn't have towels and plates and everything. So we went, furnished it. Lo and behold, it rented. We're like, oh man, it's a good business. So we went and bought a bunch. And without, again, checking regulations. Well, 4 or 5 years ago, it wasn't a big deal, right?
Right.
Over the last couple of years, Airbnbs became a 4-letter word in the county. The city, Henderson's kind of ahead of the game. They legalized it. The city, if you were lucky enough to get one of the 123 licenses, then you were good. But right now, I think pre-pandemic, we were 14,000 Airbnbs in the greater Las Vegas or the greater Clark County area. I think now we're down to 9. So there has been a decline. What we're seeing in the market, we took probably a 30 to 40% hit. Well, put it this way, March 14th, Janie and I were in France, and we, in 48 hours, took about 41,000 in cancellations. So that stung. Airbnb was scrambling, VRBO was scrambling, Booking.com was scrambling. They had all of a sudden just this mass amount of cancellations. So Airbnb, for lack of better words, kind of screwed the hosts. You know, the hosts are what provide the product to their platform. So we have strict cancellation policies, especially in Vegas. I have strict cancellation policies that if you were to cancel the day before check-in, then obviously you get no money. So with that being said, Airbnb refunded everybody's money. We ended up getting nothing, and they took so much of a backlash that they set up a $250 million fund that we ended up getting, like on it, say we were supposed to get $1,000, we ended up getting 250 bucks. I mean, it's something they tried to save face. So where are we now? I agree with you, Fritzy. I think with the hotels being closed, what we ended up doing is we ended up getting a lot of 30-day bookings. People that were stuck here. The Wynn actually kicked people out of their hotel. So they said, hey, you have, I think it was 48 hours to get out. So I don't know about some of the other hotels, but I know we got a lot of inquiries from the Wynn, people saying, hey, we're stuck here. Can we rent your place, blah, blah, blah. So we ended up doing a lot of that. So we have properties all the way from a 1-bedroom condo in Summerlin to a 6-bedroom house on an acre that sleeps like 17 people. They all rented up, but our pricing is what's called dynamic pricing, and it's tied to, it's a pretty cool program. It's tied to the hotel pricing. So it's like an average daily rate. So if EDC is here, the rate's through the roof. If no conventions are going on, the rate's extremely down. And so it's all automated. And right now the rates are low. So in addition to the rates being low, they get a discount for a 30-day booking. So properties that were doing like $5,000 or $6,000 a month, we're doing like $1,800 to $2,000 a month. But that pays the bills and that moves us down the road. We, like what I believe it was Dustin or Carl was saying, or Julia's saying there was an uptick in volume on the loan side. I've noticed there's been an uptick in volume in the Airbnb side. We're starting to get a lot more people saying, hey, I want to get out of California. We just want to come in for the weekend. So you're starting to see a lot more inquiries with that, but the problem is the pricing is still low. 2 things are going to happen. Vegas is going to open up slow, and they're not going to be able to meet the demand where, you know, I anticipate with our borders being closed, Vegas is probably one of the bigger hotspots to come, right? You can't
100%.
Yeah, you can't go out to Canada, you can't leave the country, you know, blah, 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 blah. So I think Vegas is going to be a hotspot, especially with the drivability. People could drive here versus fly. So, you know, hopefully with that, we see our Airbnbs get stocked up pretty good. And then hopefully pricing starts to increase. You know, we were doing last year, I think in November last year, we did almost 90,000 in bookings. So that was our best month ever. And then, you know, of course, we're like, oh, great, we're riding this wave out. And then, you know, 2020 came and killer hornets. But anyways, Here we are. So, you know, is it a good time to go buy Airbnbs? I don't know if I would be out buying Airbnbs. Any property we get, especially with the regulations, and this is another frustrating thing. We were about, you know, behind the scenes, you guys don't know, but we were really, well, some of you might, but we were really in tight with the county and the council, and we were probably this close to getting a deal done to get us licensed for all of Clark County. And then this happened. So are the hotel, you know, how much fight's is gonna be going on to either not license them or get them approved? We don't know. But you know, I wouldn't be out buying an Airbnb outside of Henderson. Henderson's still legal. The county, the city, I would avoid. but hopefully within the next year, 2 years, we'll be back where we were with licensing and close to getting them approved.
Well, two things you mentioned too. I think that for one, I think there's going to be a group of people that are going to be more comfortable in an Airbnb. So we'll see how that goes for you. Hopefully you didn't lose all your leverage or all the momentum that you made in that fight. Hopefully you didn't lose that. I'll keep my fingers crossed for you. But on the cancellations, that's interesting too, because the hotels, I'm sure every hotel handled it very differently. But yeah, I mean, what do you do in that aspect? They wouldn't have a site without a host. So
yeah, they took a lot of flack. Like if you Google Airbnb cancellations, I mean, they took so much flack that they went and set $250 million aside just for a host recovery fund, is what they called it or something. VRBO was pretty cool. VRBO said, hey, it's out of our hands. You deal direct with the host. But then, so we did that. And then what did people do? They just went and contacted their credit card company and chargebacks. And what's one thing that stinks about doing what we do is you have to accept chargebacks. So meaning, if like you were to buy, somebody steals your credit card or whatever, and you dispute it, it's a chargeback. So we probably took another, I don't know, 20,000 in chargebacks, which that stung as well. And there's really nothing you could do at that point.
Ouch. Well, I'm thinking there is going to be a group of the people that would rather go your route with the Airbnbs than hotels. I mean, yeah. I don't see how that's not realistic, especially with the requirements for disinfecting, and you're just not around as many people. A hotel, obviously, you put yourself more at risk. We want the people that are comfortable in hotels, but you're going to have the other people that aren't. Everybody handles this whole deal differently. So.
Yeah, short-term rentals are here to stay. Make no mistake. I mean, it's just the new way of traveling. People with families, people coming in town, employers putting their employees up in houses versus, all these hotels and everything. You're able to manage it. We have actually, thank God, before this happened, Area 15. You guys are probably familiar with that. The big party spot now, right on the side of the freeway at Spring Mountain.
Oh, yes.
That company came in and did a 12-month rental on one of our houses. So they've had their employees stay and rotate through our house. It's actually a pretty big house with a casita. So they came in and I was talking to them. I'm like, man, what are you guys doing? Because you were set to open. And this is like an adult party playground. If you guys don't know what it is, it's kind of like an adult Chuck E. Cheese. And they said, yeah, we don't know. We just dropped hundreds of millions of dollars into this deal, and we're not sure what's going to happen. All we're doing is just pushing back the opening to when phase 4 is here or whatever, and everybody get back out after it. So we'll see.
Well, we see on a lot of things, right? We're a little over time on our first segment, but we are going to go on to the Q&A. I want to, first of all, say thank you to Mr. Carl Bassett with HomeVestors. Aaron Taylor did have to check out. He does have an appointment, but he wanted me to say goodbye to everybody, so goodbye, and thank you to him for being here. Mr. Dustin DeHart, always super helpful with keeping us abreast of what's happening in our local lending. Julius, wealth of knowledge, super helpful. I know that some of the folks that are attending today will be reaching out and will need your product. So thank you. I've been a big fan. I have a lot of clients that use you indirectly. It was my first time meeting you, but I'm happy to meet you and thank you for being here. Travis, thank you so much for joining us today. I chatted with you in a text when you were in France during that time when I was dying for you. I'm like, oh my God, are you getting back? So that was a trip, but I'm glad you're back and thank you for being here today too. We're gonna go into the Q&A. I do see that, thank you all for attending. We'll be back in 2 weeks. And then at some point in the future, we'll be back whenever we can all congregate together again. But we're gonna keep it going in this format for a while. And just register on Eventbrite, and I always send the link, shortly before the meeting. And spread the word, guys. We want lots of folks on here. If there's a subject that you want to talk about, send it in. We'll try and get some guests on for the next show. And we're gonna go into Q&A. So Jeff, I'm gonna hand it over to you. If you have any questions on there that we are going to address, thank you so much.
I think that one of the main questions that people ask for Julius's contact info, it's actually in the chat. Julius, if you want to share maybe your email address, that would be great. The only outside question was probably for Travis. For Airbnbs, people are asking how to if they're properly cleaned and how they're cleaned. Is there procedures that are set in place for that?
No, there's not procedures that are set in place. Airbnb came out with they took so much heat, now they're really scrambling, but they came out with this 24-hour in-between check-ins as far as what they will allow on their bookings. But at the end of the day, I mean, it's up to us to clean our properties. We saw this virus in one of our properties in January, CES, if you put that together, go figure, right? So we had a Chinese company rent our big house, had all their Chinese employees stay there. And I don't know if they were from Wuhan or where they were from, but they were definitely here from China, because if you guys were on Airbnb and you would see the conversations, like they speak to me in Chinese and then I speak back to them in English, and it does everything, and it shows when they booked, it showed how much whatever their dollar is, the yen or whatever, it showed to the conversion. So I knew they were from China. But both of our maids got deathly sick after that checkout. Had all the symptoms, everything, and we employ a Hispanic maid, and Hispanics, man, they don't call in sick, and they don't not show up. They'll work to death. So when she called in sick, we were like, wait, what? And she's like, oh, I got the flu and it's really bad. And we're like, wow. So anyways, we got a second cleaning crew in there and cleaned it out, but we didn't put 2 and 2 together until all of this happened. So from then on, I mean, do we do anything different? We sanitize our properties thoroughly anyway, regardless of this virus. I mean, when people come in and party, you should see how they leave some of our houses. So with that being said, we haven't done anything different other than the standard. We steam clean our carpets. We steam clean our furniture. We sanitize everything with bleach. And, I see some people wanting to start pushing these machines, these Dovey or Covey machines. I don't know what, and I guess there's a grant now by the city up to $4,000 if we were to go buy these machines. But it's like a little backpack that you wear and you spray around your house. So we might look into getting those, but, we did do a whole paragraph on cleaning. In any time somebody puts a booking in, it goes back saying it spells out our cleaning procedures. But as far as anything different, Airbnb put something out with the 24 hours, but now we've seen Airbnb's face on how they kind of treated the people that provide their products. So Janie and I went, and we're having a full-on separate system built out, and we're just going to start marketing to our own guests and try to avoid the platforms anymore.
I like it. Okay. Well, that's interesting. I actually thought they had something in place, so that's a little scary, actually. Do you think they will put something into place now, like more of a requirement? I mean, I guess that's hard to enforce, but
yeah, I mean, just like they did their party, their anti-party campaign. All they did on that was put an algorithm out there that if a local's trying to book your place within either a few hour check-in or after hour check-in, then they won't allow that booking to go through. But as far as anything else, I mean, here's the deal, it's your property. So Fritzy, if I'm going to come rent your property and you're trusting a platform that has no idea who you are or where you are, they just know, algorithm type stuff, then at the end of the day, it's up to you to take care of your property, right? So with that being said, we clean our properties thoroughly, but if you show up at an Airbnb, I mean, Janie and I rent an Airbnb and there's bed bugs. So I'm like, oh my gosh, this place is nasty. So, it's up to you to maintain a professional operation. And that's what we've done. We've built just like Carl's flipping, everybody's doing their thing here, right? And it's all professionalism. So to scale and go at a higher level, reviews are just, I mean, that's what your business is built on, is reviews, especially in the short-term rental game. So with that being said, we strive for reviews. And to do that, you want to make sure the number one thing in this is a clean house. So if you walk in, it smells good, it looks good, the sheets are washed, everything's sanitized, you're good. Are you going to have the people that, lack of better words, bitch about everything? Of course you are. I mean, they just complain about the leaves falling off the tree, which you can't.
You can't control that? Ridiculous.
Right?
Well, does anybody else have any questions that we want to direct anybody's way? Carl, What's up? You didn't get to talk that much. Tell me something.
I'm good. I don't know. I'm good. I'm real interested on the Airbnb. Do you have pushback on HOA? Do you just go non-HOA? What do you do?
So yeah, HOA can make and break you. So, you know, here's the thing. There's some of our properties we've gotten busted on. You know, we've gotten shutdown notices, but they can only limit you 30 days or more in certain areas. So again, back to my point of it's your business. It's up to you to maintain a good product. As far as HOAs, I thought we got a steal on a deal. We were planning on flipping this condo in Avalon. I don't know if you guys know where Avalon is, Sunridge Heights and Seven Hills Parkway right there. So Henderson's legal. We got this great condo, you know, 50 cents on the dollar. Yeah. So we put it up. Well, the HOA bylaw is buried in there, nothing under 30 days. So in Henderson, if you do it and the HOA is against it, you have to do this 200-foot mailing. HOA physically has to go get a court order against you to stop. So they might, and this is where, of course, some HOAs will go the distance just to fight you. Some won't. But that's something you're going to test. And then if they do get it against you, you have 1 year to shut down. So, you know, if you get stuck, I wouldn't go buy a market property. I wouldn't buy anything at market, period, because of who we are. But if somebody is buying something at market, make sure you do your homework. And the place to do that on is called AirBNB, AIRDNA.co. And you can punch in, you go down, you sign up for a free account, then you left-hand side of the screen down at the bottom, there's a thing called Rentalizer. And you punch in the property's address, bedrooms, and bathroom counts, and it will show you what that property is going to do. Usually pre-pandemic, you took that, you added 20% to that number, and Vegas, that's pretty much what it was going to do. You know, post-pandemic, you might want to subtract 20% off that number. So right now, I would say I'm about 20% over market rents. So long-term rents plus 20%. But the problem is, you know, how do you manage? And here's the thing, any business to be profitable, you got the number one thing to manage is expenses. So pool heaters being left on, air conditioning's being, you know, turned all the way down, doors being open, heaters running. So obviously everything's on Nest accounts, everything's on, we're working to get our pool systems turned over, and then Ring cameras throughout everything. So you're constantly monitoring this. So, but
you almost have to pay for somebody to watch the monitoring, right?
No, I mean, we do it ourselves. You know, luckily when Henderson legalized it, it's great. No headaches. Headache, call the police. In the county where it's not legal yet, and you're trying to, you know, maintain your operation without getting shut down, you're on it. Like you know, hey guys, we have noise awares. They have so many cool things out right now. They have a party squasher, which if you only want 8 people in that house and there's 12 and they're trying to access the Wi-Fi, it'll shut it down. So only 8 people can. There's noise monitors. So we have decibel levels set in our properties. If the decibel goes above 70, boom, I get a text. And then we have the Ring cameras all hooked together. So we run a pretty slick system in that sense of the word. But to answer your question, Carl, I would avoid HOAs unless you read the bylaws and you're good.
Overall, so besides market rent, if I were to just put it for a 1-year lease, you're saying you're about your Airbnbs are averaging about 20% above market rent.
Right now, as of like real time.
Yeah.
Post-pandemic, it was 300%. I mean, you know, it was like, you guys just, I've lived here 24 years and I've never realized the reach Vegas has. I've never realized the amount of stuff that goes on in this town. There is stuff going on Monday through Sunday. I mean, there might be 1 week in December where there's something not going on. But, you know, we had the German, we had the German tabletop elite men's team that was the gold medal finalist that was out here, rented our house for a week, paid us like $6,000 for a week. That was in the tabletop national gold medal championship game. And this was a big day. I was like, what? I was like, you guys are in town for what? And then they told me and showed me. I never knew that went on, but sure enough. And so, I mean, like dog grooming business, you know, car wash rentals, like all this stuff goes on. And so Airbnb is phenomenal because these guys all want to come and stay in a house and go do their thing and come back. They don't want to rent a hotel. So that's what I'm saying. And you know, the fourth quarter last year, holy smack, we were printing money. And then boom, here we are. So, you know, now we're struggling to find out that new norm.
Interesting. Well, Travis, if I need to know what's happening in town, I'm calling you.
Yeah, that's why these programs, like the pricing program with the hotels, phenomenal. And so there's a company called beyondpricing.com. Beyondpricing.com is a dynamic pricing engine, and it's sweet because it does all the work for you and charges you 1% of your bookings. So if I were to get 50,000 in bookings in 1 month, it charges me $500, and it's the one that did everything. So before, it's a set it and forget it. We had one house, we just priced it at $300 a night, and no matter what was going on, it rented for $300 a night when it rented. But the problem was I was missing out on the 150 a night bookings, and I was missing out at the 600 a night bookings. So when we changed that, I think it was a 30-40% increase in our revenue.
Well, wow, I've learned more about Airbnbs than I ever knew. That's exciting. So on both ends, I'll probably go stay at one more than I have in the past. Just maybe I'll bring some of my own cleaning materials, give it a wipe down just in case. And then I think though what a great business. Hopefully the county does open it up and you're able to actually start printing money again. That'd be nice.
We'll
like
see.
Our government, right?
Yeah, right. We'll see.
Awesome. So if anybody has any more questions, please jump on. Some of the sites that Travis mentioned, if you guys are interested, I'm gonna bug him later to see if I can put that together and maybe send it out to you guys, or we'll put it in. We are posting these now, so we're going to post them in 2 different places. We're going to post them on BlackRock Flips, which is Carl's page and Jeff's page, and the show will be on there. You'll see the past shows on there as well. Constructive criticism, always welcome.
Not towards me though.
Oh, not towards Jeff. No, I'll take it.
Hey, we do have
big shoulders.
question. We do have another question for Carl, and
Awesome.
The question was in regards to how the program works for agents, them using us. Carl, could you explain that?
Yeah, so I advertise when I'm out buying. I'm the We Buy Ugly Houses guy, right? So I'm out advertising. I sit down at someone's kitchen table, and negotiate, generally speaking, directly with them, or in these days over the phone, etc. So, but I'm not an agent. So if an agent comes to us and says, "Hey, I just got this listing, or I'm about to get this listing. Would you like to put a cash offer on it?" I'm going to get the address from them, get some information, and I'm going to give them a number. We can narrow it down if we can see the inside, right? But on the same note, I don't have to see it. You know, there's lots of ways around that. We can negotiate that. And so what we'll end up doing is that agent can represent us as our agent. And so probably, I'm assuming you got the other listing, so now it's a 6% listing or 6% commission for it that you're getting. And then we remodel it after we buy it. And then when we go to sell it, we give you again another 6%. So listing, to sell. And of course you can try to pre-sell it while we're remodeling it and show progress photos. So maybe you get 12% on that property versus 3%. The other route is if you come across a good deal, it's not your deal, but you want to represent us, just come to us. So sometimes you're out at a property and you're saying, hey, people will go with we call them iBuyers, but they'll go with, a Zillow or whatever, or Open Door. They'll go with them and they'll never tell you. They just won't call you back. So sometimes you just, poke the elephant in the room and you just say, hey, at the end of the day, are you interested in going that cash route? Because I represent the largest buyer in the United States. Would you like me to get a cash offer from them? That way you stay in control as the agent and you're not trying to put it off. You know what I mean? You're not trying to put it off and hope that they just don't call someone else. You stay in control, giving them options. Maybe my number comes in, they say, no, I'd rather list. That's fine. It's not a pushy thing. It's just our number is our number, and you'll, do whatever they need to do. Give them whatever advice. Maybe they go the traditional route. Maybe they hit the easy button and sell to us.
Well, and that was a big part of why we started this. We wanted to be very competitive. I work with a lot of investors, a lot of who are on here, and if they don't have business, I don't have business, you know. So if agents don't have business, I don't have business. Ticor doesn't survive without all of you guys. So we need you guys to continue to get deals. And a lot of these big, there's a place for everybody, right? But a lot of these big buyers were coming in and shutting out in the beginning. Not everybody knew how it worked, kind of shutting out the agent and the investor as well. And then at times we would end up losing the title as well. So depending on the situation, what we're able to do is, you know, you get different offers that people are going to shop. Consumers have control over what they choose these days. So because if they want to go online and they're going to look up data long before they talk to you, they're going to look at their options long before they talk to you. So if you bring them more options, and you have people that are workable, these guys are all local. If you care about our community, you know, a lot of times if somebody's selling their house and they live here and they care about their community, they'd rather sell to a local investor rather than a national investor, just because they know the neighborhood more. They might have, you know, bought other houses and brought up the market value in that same neighborhood just by flipping a house in that neighborhood. So they know the market really super well. There's a space for everybody, like I said. So there's national buying has been here the whole time, and it's not going away. It's just you have some local options as well as to who you can go to when you have a client who needs it. So just add some of these guys to your list as to an option for a buyer, and we'll pass out some of that information if you guys don't have it. I'll send out an email actually with, like I said, some of the sites that Travis mentioned, Julius's information if you guys didn't get it in the chat. And also I'll send out some of our Facebook links and stuff too, which I haven't done in the past. So thank you all for being here very, very, very much. I really appreciate it. Couldn't do it without our panel. So thank you all for taking the time today. Again, if there's a subject you guys want to touch on in the future, please let me know and we'll try and address it. And otherwise, we will see you in 2 weeks, which let me look at the date in 2 weeks. It is the 3rd. So we'll have lots of changes by then to update you on. And I appreciate your time today. Thank you.
Hey, thanks everyone.